Hi. Audio good, video good. Hi, Juan. Yeah, welcome. Beautiful. Great. How's everybody doing? How you doing, Juan? Let me lower this a little bit. Don't need my don't need my big head blocking the charts, right? Yeah, great. Awesome. So I'm gonna apologize in advance because tonight you're probably gonna be up to your ears with talk of trending tapes. Um, I'm apologizing in advance, but you're going to hear a lot of talk of trends because we are smack smack dab in the middle of a really aggressive trend, and I mean it's certainly not unique. I mean we've had stretches this year where we've been in like these similar scenarios, right? I mean, like as ugly as this past December was, I mean, we just had like a real steady, consistent action for several months to start the year, and then after we had like the May dip, and then it was like June and July, right? And then I mean, we had like the September, October roller coaster, and now we're kind of doing like the same thing all over again, right? Like Yogi Berra says, it's like deja vu all over again. So we've seen this play out, and we know how to capitalize on it. We know how to approach it. It's just it really like I feel like the toughest thing sometimes is just not battling what the market's giving, or like not trying to like over analyze everything and kind of like talk yourself mentally out of the trade, right? And I struggle with it. I feel like a lot of traders that have been doing this a while struggle with it because one of the things that you know traders like that have been around for a while, like they learn to like kind of trust their convictions, right? And like that's kind of like how you get more successful and you become like more confident is when you get the like like the higher conviction ideas. And like for a while, I mean, like I to be honest, like I still can't even believe we keep going up as much as we do, like nonstop, and there just has not been like a single ounce of selling pressure for like the last like month, right? I mean, like when we got back above the 8 EMA at the beginning of October, it's just been like this really, really consistent, steady, higher highs, higher lows, riding this 8 EMA just absolutely perfectly for the last month, right? And like the whole time, I'm like, you know what? We're one tweet away from collapsing. We're one tweet away. Like, Trump is going to say something and raise tariffs, and we're going to collapse. And to be honest, like that might still happen, but in the meantime, and we've literally just knocked off like a 12 point run in the last like 2 weeks, right? Things are breaking out. Like stocks are. I mean, like the action like under the surface, even though like we're not like crazy volatile. Actually, volatility is pretty much like the overall market volatility is pretty much dried up. But I mean, under the surface, you're getting some really good action, and like even though like mentally, like I still feel like this is like too much, and like we can't keep going, and like eventually, like like these headlines are going to catch up to us. It's just like there's nothing indicating that we can't keep going. I mean, like the trend seems to be intact. We're just riding the 8 EMA, and there's really not been like a single instance when like the selling has stuck. And like every time we've had like a little dip, we've held where we needed to, and then we've put in like a new high either like the next day or 2 days later, right? Yeah, exactly. Climbing a wall of worry. Great way. Great way to describe it. I think personally, like what's kind of like thrown me maybe a little bit of a curveball throughout this move is the volume, right? Because we actually at no point since like that October pop right here. So like since October 11th, that was the day we got back above the 8 EMA. So since that session, we haven't had a single day of above average volume. So from that day, we've added 15 points on the SPY, and we haven't had a single session of above average volume, which is kind of crazy when you think about it. I mean, because we broke through a pretty critical level, and we've kept going and going and going. And we've had the Fed, we've had a ton of earnings, and we had a jobs report, but nothing has really led to like an increase in volume. But it, like at some point you have to just like say, okay, like the volume hasn't been fantastic, but you can't argue with the price action. I mean, we keep going, and honestly, like you keep riding the momentum while it works, right? So you don't want to battle the tape. At some point, I'm sure something's going to happen. We're going to pull back. We're going to break that 8 EMA. And when we do, then we take like a step back, right? Kind of clean up maybe some of like the positions, and then maybe we start to like focus on maybe like two-way action a little bit more. Yeah. Well, I guess that like I guess that kind of remains to be seen, right? Like because like from what I've read, we've had a lot of outflows this year, and it seems like people could be a little bit more out of position, maybe in the sense that as they've been like selling and lightening up and maybe moving more. I mean, for a while, bonds were all the rage. I mean, we had like a parabolic move in treasuries, right? So as the market keeps moving higher, and then like the yield is starting to come back, then people are kind of at like an awkward position where like that money maybe has to come back in, right? Yeah. So either like the cash remains on the sidelines and people like keep lightening up, which I suppose is a possibility, or people that are tied to performance, maybe they have to start putting money back to work because they're at risk of like missing, especially if you get like a melt up, right? So it'll be interesting to see. But like from a technical perspective, like to me, the most important level remains the 8 EMA. I mean that's an unbelievably clear level of support throughout this past month, and once we lose that, I mean, it doesn't mean that the bottom's going to fall out, but once we lose that 8 EMA, then you kind of need to then you need to take some caution. You need to maybe like clean up some stuff that maybe if you're a little overextended, maybe you want to clean some things up when we lose that 8 EMA. Maybe like kind of take a step back. Maybe like look for some like two-way trades a little bit more aggressively, right? Because like right now, it seems like the short opportunity is a little bit tougher, just because you have like this really consistent, steady trend. So that 8 EMA, I mean, like that to me is like the line in the sand. When we get a break of that, then like I said, cleaning up bullish positions, especially like shorter term option positions, and then focus maybe more on like two-way trades, so more like a better mix. Because right now it's like 75 to 80% like bullish to bearish, and that's really just because of like the trend we're in. If we start to break that 8 EMA, I mean, I'd probably like to get that closer to like maybe even like like 60-40, like bullish to bearish. I mean, depending on like what causes the drop. Like 50-50 is still kind of tough because of the overall action, but like kind of get that mix a little bit better. And then Q's very 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 similar. Tech is definitely acting great. I mean, like Apple hasn't had a pullback in months. So I mean, you definitely have big tech, which is leading. I mean, like from like a trade perspective, they seem a little bit tougher. They're not really many like compelling patterns forming. But then you're also having a lot of participation in like like healthcare. Look at the move in healthcare that broke out. I mean, financials have been acting great, right? So like those are a couple other big weights in the overall averages outside of tech. Tech is always a big weight, but then the financials and healthcare, those are like really important as well. Um, but like the Dow just started to break out, as you can see here. So like the Dow just starting to go, right? So that had been lagging a little bit. The Dow's starting to go. That could be something where maybe you get some catch up, and then I think I don't remember when we were talking about it, but we talked about the IWM not too long ago, and this one's really interesting because this has been lagging pretty substantially, and you can see that it's just kind of like it's kind of like treading water under like this really, really critical like 12-month area of resistance, right? So like 160 has been the overhead supply range numerous times. Yeah, yeah, exactly. So like this is something where, I don't personally like trade options on the ETFs like from a bullish point of view very often. Most of my my focus on like SPY and Q and Dow and those things is more like hedge oriented, where I've been buying like put spreads or puts, as like a hedge trade. But this is one where it shapes up where it could actually be like a nice like bullish setup where you get like a trigger above 160, and then maybe you look at like contracts, maybe maybe like a month and a half to 2 months out to see if maybe you get like some catch up. Just because like small caps kind of treading water, like a really kind of like coiled spring pattern, and especially if the averages like the SPY, the Q, the Dow, if they keep grinding to new 52-week highs, it seems like it's almost like a matter of time. And like if it was like a specific stock, maybe I'd say like 2 weeks, would be the time frame. But because it's like it's a moving average. It's not a moving average. It's an average, right? So it's not going to have like the same percentage move as fast. So maybe like month and a half to 2 month time frame. So if it were to break out, yeah, exactly. So, you're not going to have like a 10% move overnight in this thing versus like a stock. You could see maybe like a more aggressive move like that. But, like if it were to break out soon, then maybe like January timeframe. So like the January 17th expiration, like that'd be 2 months through the beginning of the year. Maybe you get like some like inflows at the beginning of the year. Who knows, right? But like that's kind of like the time frame I'd look at on like a bullish strategy, like on IWM, like 6 weeks to like maybe 8 weeks. So like month and a half to like 2 months. But 160, really, really clean trigger level. It's at the moment it's just kind of like hanging out, like building like a base underneath. But that's definitely one that I'd start to keep on the radar because it's got a lot of potential. It's got a good look, and the option pricing actually isn't too bad. Like I'll tell you right now, like so right now like the IWM like the January 17th, like say like the 160 calls pricing in about like 290, like 285 to 290. But you figure if it breaks out, I mean this could easily have, in my opinion, between like 7 and like 10 points over that time frame. So it does seem like it's a pretty good setup, just for like a bullish trade. So something to keep an eye on. I might actually write that up for a trade idea. I've been keeping an eye on it. It just, it hasn't given like a reason necessarily to be involved, but I've definitely been keeping an eye on it. So I might actually write that up for a trade idea soon. But that 160 level, definitely like a really important price point that you want to focus on. Yeah. So I like to talk about gold and silver, and honestly, like the next couple of weeks are going to be kind of critical on these because they lost like this higher support range, which they had been holding, and it's trying to get back above. So as you can see, so gold, like 2 weeks ago, broke down out of like the higher support range, but it's trying to like turn and maybe like make a move back above it. So it kind of coincided with like maybe like as yield stuff broke, right? Because like staples, so like right around the same time, you saw utilities pull back, you saw REITs pull back, you saw treasuries pull back, and like in gold and silver both pulled back too. So like some of like that like defensive yield inflation trade, saw some, I don't know whether you want to say profit taking or just maybe some like money coming up. But like these next couple of weeks are gonna be real critical because I still really love like the long term charts and how like gold and silver are setting up. But like near term, to like kind of repair like these higher bases, like they probably need to get back. Like GLD probably needs to get back above like 139, 140, reset above the 50-day, and then silver kind of like a similar scenario where I'd really like to see silver like at minimum back above like 16 to kind of like repair some of like these higher bases that have formed. But like I really want to stick with the idea as long as they don't break down substantially. But I think like the next like week, 2 weeks, 3 weeks are going to be really really critical because they look like they're trying to turn the corner, but they still need to go a little bit further to reclaim some really key levels. So like to me like I liked how they were treading water for a while. Now I'm a little bit more cautious, but still, I think it's worth sticking with. If they put in like lower lows versus like the previous December lows, then that'd probably be the point where I really start to question whether these are things I want to be involved with near term. So like that's kind of how I look at this now. Sticking with the ideas, gonna give it the benefit of the doubt. But if they start to break like the previous November lows, then I'm gonna like maybe like pull off the throttle a bit with these. If you guys have any questions while I'm going over this, yeah, don't hesitate to just shout them out, or if you have any comments. Oil. So at the moment, XLE is still kind of like treading water. I mean, definitely one of the sectors that's materially lagging. So with a lot of like sectors, especially like the bigger sectors, breaking out and either at or very near their 52-week high, energy definitely stands out as one of the bigger ones that's lagging. Yeah, I'd say I mean I think that's the point. Like that's why I was kind of like focused on rolling those out to January because I think like because it's really tough to like to time like when like a news announcement would hit. So I feel like as long as you have like enough time value on the hedges, like they should maintain like their premiums pretty well, and then like that kind of like helps that helps like that helps like the scenario where in the scenario where like maybe you like like some headline crosses and we drop like $5 one day, right? And then like you're kind of like scrambling to get some protection on. So what I think like you could maybe look at is keep like maybe like a smaller, you could keep like a smaller hedge on right now, and then once we like break once we break those like those trend support levels, then you could maybe get a little bit more aggressive with the hedges, because that to me would probably be like the point when like the hedges really start to accelerate in value. So, and it could be like you stick with like maybe like smaller hedge while we kind of grind, right? And then once we break the 8 EMA, then you can maybe like add to that, um, because like that would probably be the scenario when the momentum would build a little bit to the downside. But as long as there's like enough time value on the hedges, like they really shouldn't deteriorate too fast. It's only when you're gonna get like into like maybe like less than like 3 weeks, 2 weeks. That's when like the hedge you'll start to see like that theta burn really accelerate. So with the hedges out through like January at the moment, I feel like it's kind of like like plenty of time value, and I mean I feel like the implied volatility is kind of low overall, so like you're not like paying up through like the nose on them. So I think it's worth sticking with some, and then once we break the 8 EMA, it could be like a point where you can like add and get a little bit more aggressive with those. Does that make sense? Is that kind of what you're asking, or okay? Yeah, I mean, because like you can approach the hedges almost like like you can have like a little bit on as like almost like an insurance policy, and then you could actually like physically approach it as a trade, like on like a shorter term basis, like once like that trigger crosses, right? So like once we like trigger like a potential breakdown like on a move below the 8 EMA, then you could like view it a little bit more like a specific trade setup, right? Whereas right now you hold it maybe more as like an insurance, so like smaller, but like an insurance policy just in case something comes out of the blue and we like drop like 5, 6, 7, 800 points one session, like out of nowhere. But then if we crack underneath that 8 EMA, then you could view it more like a trade opportunity where you could maybe like put a little bit more size on and look for like a quick move down to the 20-day. Yeah. So it kind of depends on how you want to view it. Um, size is going to be important, and also expiration. So like time is going to be important because shorter term contracts. I mean, you're going to see like that theta burn, especially if we're in like a low volatility environment. So like I think like January probably a good time frame. Once we get towards mid December, then maybe we'll think about even pushing that out if no like real pullback has occurred. Yeah. All right. So oil, kind of like, kind of like just hanging around this 12 area, and the reason why I think it's significant is just because when I draw these lines, you'll see what I mean. Um, so oil kind of hanging right at the top of like this pennant that's formed on like kind of like the last 12 months. So had that head fake on had the head fake on that drone strike news, pulled back, held the bottom of the pennant, and now it's like kind of like basing above the top. So you know, not quite there. I don't personally I don't really like trading oil. It's not. I just I don't have a feel for it. Some people it's all they do. It's not for me. But I think it's worth keeping an eye on because, like I said, energy one of like the notable laggards on like the bigger sectors, especially like the bigger weights. And oil's kind of an interesting bullish setup. So if you start to see oil break out, could bode well for energy, and especially like the 1-2 combination of oil rallying and energy like materially lagging could lead to like a pretty nice catch up trade. So oil's not quite there yet, but it's interesting enough to where you maybe want to keep an eye on it, and especially because we've seen some like option positioning in energy recently. So it seems like some of like the smart money is starting to like nibble on like energy names. Um, you've seen like some bets like out through like January, like early next year. So it seems like people are kind of like putting some money to work here. It hasn't triggered. Oil hasn't triggered. Energy hasn't triggered. But it's one of those scenarios where it could kind of develop quickly if oil starts to go, and then yeah, yeah, exactly. So it's like it's one of the sectors that I feel like could really wake up and really start to like play catch up quickly if you have like a few things fall into place. So oil rallying would certainly help, and then honestly like just like the kind of like the consistent grind higher in the market could help too. So it's one of like the areas where you want to keep an eye on. I thought the Halliburton set up pretty well. It's still kind of like treading water down here, right? Still kind of treading water. Hasn't really broken out, but again, like energy hasn't really broken out. Like, but you can see very clearly that above the 100-day, just like this great air pocket on the chart, and just it seems like a really interesting setup, kind of like a higher profile name in the space too. So, kind of just waiting, want to stick with the idea, watching oil, but some things need to start building momentum here, and then maybe you get like a really nice move in a lot of these like kind of like beaten up like energy names that really haven't gone anywhere for a while. But yeah, definitely. I feel like Halliburton looks great. What was the other one I was looking? I mean, like Hess kind of like threw a little bit of a curveball, but definitely one of like the leaders still. And even like Chevron, even like the options expired. Like I feel like this is like a name that could go from like kind of like nothing to like something really quick, because you can see like it's just kind of like when I go back further, right? You can see what I mean. Like it's just right at the top of like this long channel. So it wouldn't take a whole lot to break out. So just like some things that I'm keeping an eye on them. Not all set up well for a trade right now, but I feel like they have potential. So maybe it's time to do a little chart work in the energy space, a little bit more like earnest, a little bit more in earnest, right? For a while, I just wasn't really interested in it, but like now, maybe it's time to do a little bit more chart work, because if things start to gain momentum, it could be some like really great opportunity in the energy space. Any questions? Otherwise, we'll hop into the lesson for today. Cool. All right. So today, go over historical volatility a little bit, and just I guess kind of how it it sets up for like specifically for like a trade idea. Um, so maybe you're familiar with historical volatility, maybe you're not. Um, it's kind of like the it's almost kind of like the forgotten cousin to implied volatility. Uh, because implied volatility really it gets all of like the attention and rightfully so. I mean, implied volatility is really critical for an options trader. I mean, it's really like like you as an options trader are trying to gauge the pricing of the contracts versus the future potential of the stock, right? And implied volatility measures the expectations for movement going forward. So it obviously it makes sense why implied volatility is such like a huge component of an option pricing, and also as an options trader, like why like kind of like always factoring that in, right? Um, but historical volatility, it doesn't really get talked about a lot, but it can actually create interesting. It can be an interesting signal for trade opportunities. Okay, so I'm going to preface this saying that like in and of itself, historical volatility it won't necessarily like give you a trade idea, but it can be within combination of maybe like another like factor or another signal. It can be like a pretty nice indicator. Okay. All right. So just very quickly, historical implied volatility. So that IV, I'm just abbreviating. So um, implied volatility is the level of volatility expected on a stock over the time frame of the options, right? Now, historical volatility, you can almost think of it like the batting average for the stock. Okay, so it's basically like the average level of movement or volatility over the stock's lifetime. So however long the stock has offered options, like sometimes some stocks have only offered options for a year, couple years. Other stocks have had option information going back like 30 years. Okay, so it's basically like the average level of volatility for that stock over its lifetime. All right, so implied volatility looking forward, that's what the option price says is the expected volatility over the course of the time frame of that contract. Historical volatility is not specifically related to one contract. It's related to the average realized volatility for the stock over its lifetime. All right. And sometimes you might hear people say statistical volatility, and that's basically historical volatility, right? They're kind of like interchangeable. Some people will say one, some people will say the other thing. But they calculate it using the closing price from one session to the next. All right. So it's like the change in the stock from the close one day to the close like the next day. And again, like kind of using like the baseball analogy, like a batting average, like the the historical the historical volatility, it will move, but it's going to be a lot more gradual. Okay, so like a stock will have to have higher volatility for an extended period for like the historical volatility to start to gradually move higher, right? And then it'll have to have like consistently lower volatility for a long period for that historical volatility to start to move lower. All right, just because it's going off like a much bigger base, right? You have like a lot more time, and uh, you'll see when I go through like an example in a second, kind of like what I mean, like why you'll see like historical volatility. You're not going to see it in a specific contract. It's going to be like related to like the individual stock. All right. Um, so again, like historical volatility, if you view it as the average, or like maybe like if you want to say like the benchmark, then you can view implied volatility for a specific contract as either um, elevated or restrained. So if implied volatility, right, is above the historical volatility, then you could say like the option prices are elevated, right? They're expecting to move kind of greater than the historical average. Or if the option prices are below historical, then you could say that like the options are anticipating a move underneath its historical average. All right. And while the second, so like, option pricing below its historical average will be a little bit less frequent. Um, you'll see, plenty of reasons why it'd be above average. So earnings, like maybe a major event, right? If you have like a huge news announcement coming up, or if like the overall market's like particularly volatile, you could see like a lot of contracts trading above their historical average. All right. And from like a trading point of view, when you see the implied volatility above the historical, that's in like the textbooks, in like the options trading textbooks, that would be an opportunity to sell premium. So like traders would view implied volatility above the historical volatility as an opportunity to sell premium, or like a regression to the mean, or regression to the average, right? But again, man, like that's like the textbook definition, and a lot of times that can ignore maybe upcoming catalysts like earnings, right? So it's not like a absolute scenario where implied volatility is high, you're selling contracts for reversion back to the mean, because you really need to like know the individual stock. You need to know what's coming up, and why the option pricing might be elevated. All right. And on the other hand, so when implied volatility is below historical average, right, then that's an opportunity to go long premium, right? Because again, like if the options are priced below the historical average, then you're thinking that there's an opportunity for the implied volatility to expand back in line with that historical average. Okay, so that's what I'm going to talk about specifically for like tonight is when the implied volatility is underneath the historical volatility. Okay, so I don't know like your guys' like individual like option setup, like what platform you use, but this is mine. It's Sterling options, and you can see like on the tabs here. So I have so this is on the call side, and this is on like the put side. But you can see like implied volatility here, and then historical volatility, right? So just like two individual tabs. So this is the puts and this is the calls. But we'll just focus on. Oh, it's blurry. Let's see. Let's see if I can resize this. Hey, you know what? Let's just do this instead. All right. Let's give me one sec. How's that? Can you see? Is that uh is that better? Okay. Okay. So these are our so I'll just go over this again. So you can see like implied volatility, right, and then historical volatility. So these are like the columns for like the calls. So I'll talk about like a couple different stocks, but the first one will be Twitter. Okay. And you know, if you're not familiar, like Twitter got smacked on earnings just like the last earnings report, so it got hit very very hard, and obviously like the stock um, went from like closer to a 52-week high to getting hit very, very sharply. So the volatility has been elevated on this basically since its earnings report. I mean, volatility has been kind of elevated for a while, but specifically since its earnings report. So you can see these are like the January 17th expiration options, right? So you can see like 2 months out. So like all of like the time frames I'm going to talk about tonight are out through January, just because it's like it's an easier thing to show as to make the point through like January options. But you can see that the contracts, right? So even like at the money contracts, right? They're trading above their historical volatility, right? So like the implied volatility of the January contracts are between 5 to, depending on if you go a little bit further out of the money, between 5 to maybe even like 10 points above their historical average. So what this is saying is that the option prices are elevated relative there to the historical average, right? And in this case, probably due to recent developments in the sense that the stock got absolutely destroyed on earnings recently, and that could be like signaling to you that there's either expectations for greater movement, right? Or maybe it's one of those scenarios where you want to be careful laying out the premium, right? Because if options are expensive relative to historical, then it either tells you that maybe people are expecting a big move, or maybe you want to be careful laying out the premium, right? But this is one of the examples where you can see that like the implied volatility elevated versus historical, right? Let's see what's it. What's it? Disney. Oh, another one, right? So Disney. Just pull up the examples here. So Disney, right? So not to the necessarily like the same extent as Twitter, but again, I mean, another name that's had like a lot of recent movement, right? A lot of recent big swings. Volatility is starting to expand, and you can see like out through January, right? Options, the implied volatility above like anywhere from like 3.5 to maybe like 6 above like the historical average, right? So again, kind of shows that like these options are more expensive than normal, right? The implied volatility is higher than normal. Expectations for movement higher than normal. Okay. What's the other one I talked about? Facebook. Oh, I think Facebook is kind of in line. I'm just trying to pull up the ones. Remember what it's. So like Facebook. So here's an example, right? Like just basically in line, okay? So you can see not that much of a separation. It's just kind of trading exactly in line with its average. So it's not really saying anything. I mean, if you look at like the stock, it kind of is like treading water in like the 190s. So it's not particularly volatile. Also not on the low side. So again, like implied volatility more or less in line with historical. So it's not really indicating one way or the other versus like Twitter and Disney both elevated. Facebook more or less in line. All right, and now Amazon's interesting. So you can see Amazon, right? Maybe you don't maybe it hasn't like occurred to you like just because maybe look not having watched it or maybe like you still see Amazon move like 10-15 points a day, and it wouldn't occur to you that the options are that much below historical average, right? The implied volatility is that much below historical average, but these are out through January. You can see, so anywhere from like 4.5 to, I mean, depending on how far out you go, it could be like 6 to 7.5 below the historical average. Okay, so it has had news, right? I mean, it had earnings. It's had some headlines around the antitrust or what have you, right? But actually, Amazon, one of these instances where it could actually be offering like a really interesting opportunity because the options, like the implied volatility of the options out through January, are actually priced several percentage points underneath their historical average. Okay, so if I pull up the chart really quick, we can kind of talk through this, but you can see that the stock, right, kind of been consolidating, kind of like treading water, not really doing a lot under 1800. So like the option pricing has really been kind of suppressed, and it's kind of kept like trending lower because the stock really isn't going anywhere, been kind of range bound, right? So what's interesting is that whereas like a lot of like the high beta like tech names a little bit elevated, Amazon actually kind of below that historical. Okay, so let's go back. Let's see if Juan, tell me if let me pull this up again. Let me know. Let me know if it's still blurry. Better. Okay. All right. Okay. So yeah. So long story short, historical volatility, right? It's not going to tell you when to enter a trade and what to do with a trade necessarily, but it's going to be something where you can combine it with. I like to combine it with technical analysis, or even like possibly like if I know that there's some potential catalyst, maybe a little bit under the radar coming up, right? It can create like a really interesting opportunity. So a lot of times you'll see like that implied volatility trade under historic when it's in a consolidation, right? And like I showed with Amazon, like the stock kind of going sideways, like the overall volatility kind of drying up a bit, and you'll see like those longer term options really start to kind of like tick down, right? The premiums will be a lot lower because the implied volatility is a lot lower. But like the trick is if you can like kind of combine like that option pricing information, so like the implied volatility below the historic with like a technical trigger. So like if you can like time it right, like get involved in those options right before the stock breaks that consolidation, then you'll have like this really great combination of underpriced options versus historical, right? And like a technical trigger, and it's like a just it's like this like great trade setup. Okay, so that's why I was saying like historical volatility on its own, like I won't necessarily find like a trade idea off of it, but like when you can combine it with like a nice technical trigger, so like a stock that's just about to break a consolidation, right? So if Amazon were to get through 1800 or start to tick up to 1800 and look like it's going to break out, or if it were to like get down to 1700, look like it's going to break down, then it could really lead to like a nice trade opportunity because it's like a combination of underpriced options and like a strong technical signal. Okay, so some of the things that I like to watch, and like some of like the names that I'll focus on this more exclusively are like high beta, momentum, tech names because to me like these have a well-defined, consistent history of volatility of big moves, right? So when they go through like these stretches when they're not really moving around much, it's almost I don't want to say like an anomaly, but you almost look at it as like an anomaly, right? Because like over like the course of its like trading history, like these stocks are more often than not volatile. So when they go through like periods of lower volatility, it's almost like waiting for it to like revert back to like those crazy swings, right? So like Amazon for the last 4 months really hasn't been doing a whole lot, but you would expect Amazon at some point sooner rather than later is going to like wake up or maybe like get hit really hard, right? And like those options that are now like anywhere from like 4 to like 7 percentage points underneath like their typical pricing could really present like a nice opportunity, right? And I focused on the January 17th contracts. And like I like to say like longer term is really like the way you want to play this because like shorter term contracts just by like their nature are going to have higher implied volatility. So like if you went with like contracts like 2 weeks out, just by like the nature of shorter term contracts, they're going to have higher pricing. Okay, so like longer term, it's going to be like the sweeter spot. So like 2 months, 3 months. You maybe even like you want to look like even like 4 months. So it's like it's a little bit further out, but that's where you're going to get like I feel like a better opportunity to really capitalize on this scenario when you get like the a pricing like differential there. All right. And again, like I really want to like time. So I want like the technical signal to really line up. So like I want like that I want that like trigger to like or like the stock to look like it's about to like trigger that breakout or trigger that breakdown. So it's a combination of like lining up the technicals with like the option pricing. I mean, you could theoretically like start to build a position while it's in the consolidation because that from a pricing point of view might offer like the best or like the lowest prices, but at the same time you kind of run the risk of the stock remaining range bound, remaining in the consolidation, and then like the theta burn will just kind of like erode any of that pricing potential that you're looking to capitalize on. But if you're looking to start maybe like a bigger position, maybe you have like a really high conviction play in the stock. Like so, I just keep talking about Amazon just because it's one that really stands out to me. But like, say like you're absolutely convinced Amazon's going to go, in the next couple weeks, then maybe you could start to build a position while it's in that consolidation because this will be like the time when like the option pricing would probably be a little bit lower. And then as it starts to look like it's going to resolve that consolidation, then maybe you could add because like even then like the option prices probably won't jump that dramatically before it actually breaks out. And then once it breaks out, you could see that implied volatility really start to expand as the ranges expand, the volatility expand. Make sense? It's it again like it's like it's one of like it's one of like the more interesting aspects of options is that there's a lot of information that you can like take in and kind of like utilize. Um, some of like the setups maybe kind of stand alone on their own, but then like like this, so like historical volatility. Maybe most people don't even like look at it at all, or maybe most people don't focus on it on a day to day basis, and that's fine. But there are like interesting like trade ideas that kind of arise due to it, and sometimes they're not exactly like if you didn't see it, then you wouldn't maybe know. So like if I just looked at Amazon, I wouldn't necessarily think that the options were priced at kind of like a discount to their historical levels because like I think Amazon, everybody's looking at Amazon, everybody's got an opinion on Amazon. It does a ton of volume on a day-to-day basis, but actually it's actually a lot more interesting from an option point of view to me now because I'm looking at it and I'm seeing that like the implied volatility is anywhere from like 4 to like 7 percentage points below its historic. So you know it's just it's something that I think that maybe you want to like add it to like your like so I just have it up there on like my option. So I have it up there on like my option chain. So I always kind of have like a like an eye on it, even though I might not watch it very closely all the time, but I always kind of like it crosses like my site, crosses like my like my my desk on a day to day basis. So I do keep an eye on it here and there, but I mean, like that's one to me that like really stands out. So I figured I wanted to talk about it because I hadn't really gone over it before. So, yeah. So if you have any questions, I mean, otherwise we'll maybe go over a couple trade ideas. Yeah. So like just like for Amazon specifically, like if we were to get through like the low 18s, right, or like down here, it's like a really clean level of support. So like if Amazon were to like start to like tick up into like 1800, 1810, then you would think, okay, maybe it's getting close to resolving the consolidation finally, and then you can like start to nibble on like upside options, utilizing like like that historical like kind of like signal, right? Or on the downside, obviously, if it starts to like tick down to 1700, you could say, okay, this thing's finally starting to resolve to the downside. Maybe look at like puts, but like generally speaking, like puts will carry a higher implied volatility versus calls, just because that's like the nature of most people. Most people will view um, that's like a normal skew because people like typically sell calls and buy puts. I mean, that's like the normal skew of options. Yeah. So hopefully like Amazon gives like a trade, and then I can actually write this up for like a trade idea. But those will kind of be like my levels, like say like 1800 to 1810. Then hopefully like the option pricing is still kind of in line there, or like down like around 1700. And then maybe like I'll write it up for like an options and play idea. Let's refresh this real quick. Okay. So a major focus of like a lot of like the trade ideas recently that aren't earnings related have been like bullish. I mean, I like to have at least a little bit of a mix from like bullish ideas and bearish ideas. It's just it's more challenging right now because we're in such like a slow, steady trend that it feels like it feels like such like it feels like you're kind of like swimming upstream, trying to get like kind of like a sustained move lower on stocks. I mean, there are obviously plenty of things that have gotten hit, and things that actually act weak in a strong tape. But like overall, I feel like the path of least resistance for stocks for a lot of stocks right now is higher. So I've been focusing on like a lot of bullish setups, and like what I like, and what I screen for a lot in like a tape like this is moving average breakouts, continuations, and then like kind of reversions to trends. Okay, like those are kind of like my three favorite patterns in like a trending tape like we're in right now. And you'll see these like play out a lot, but like Lockheed Martin, right? So this is one to me like it's a continuation of like a trend, so or like a reversion to the trend. And like this is one like I'll like I like to like screen for like setups like this. Like this was something that like is like specifically in like a strong trending tape, right? So I'm looking at like a stock that's just for the most part this year it's been like a really aggressive trend, right? Got got hit a little bit ahead of earnings. Um, didn't really do a whole lot on earnings, but then it held like the lower boundary. It held like this 100-day. And then what I thought was interesting and what I looked for was like a cross through the moving average, right? So when it crossed through the 50-day right here, I felt like it really set up like a nice like breakout reversion into like the trend. And what you'd be looking for, A, was like basically like a move back into the trend, or like that kind of coincided with like the October high. So like that would be like the first target, and then the second target would be like a retest of the September high. So basically, just looking for like a move like back above like trend support, which it's already accomplished. Now you're looking for a move back to like the high of like that of like the September trend. So like a high of like the September like extension here. But these are like setups that I feel like these work like particularly well in like a strong trendy tape like this. Names that were in like really aggressive trends, maybe pulled back, and now you're looking for like maybe like a curl, and then like a maybe more like a continuation, like a push back into that trend. Yeah, yeah, no, certainly. It certainly could pull back from here. I mean, actually, a pullback might be healthy, like just from like the overall like trade perspective. So, I mean, it could pull back a few points. I mean, holding here, like if it hold like low like 390 area, that'd be ideal, right? Maybe like reestablish support above the trend line, and then maybe you get like another push up into like the 400 range. But this is like overall this is maybe not just specifically like the Lockheed setup. Like this is like a setup that I'm looking for, and I feel like what works. So like maybe you guys would come across like setups on your own that are kind of similar, and I kind of wanted to just highlight it as one of like the patterns like I'm like kind of screening for in this type of tape. So like a break break under the trend, kind of held support, and now like a curl and a turn back into the trend. I feel like that really works great in like a trending tape. So you're looking for like the two targets would be like a move back into above the trend support, and then like a retest of the high. So like those are the two targets. So we already scaled back risk once, and the next target would be like move up like at 400. Um, one of the other ones is like moving average breakout. So right, so Octa had like a little bit of like a wedge pennant that formed, right? And software for a while it really wasn't great. I felt like I couldn't make any money in software because earnings weren't really rewarding. The price action wasn't good, so I'd kind of been leaving like software stocks alone. But they started to like really act a little bit better. Maybe at the beginning of last week, and Okta crossed my screen because it. Let me get rid of this. You can see like it crossed through like the 50 day. So I'll zoom in. So right here, right? So you can see like the 50 day had been like really tough resistance, right? Earlier in October and then again in November. So what I'm watching is like a cross through moving average resistance, right? So like a breakthrough moving average resistance. Like this is working really great in like a strong trending tape like this. So you're watching for maybe like a move through like 1 month, 2 month resistance, right? And you're looking for like a quick move. And in this case, it was like a really clean setup with like a clean target up at the 100 day, right? So um, actually, there's been quite a few of like these like setups that have like played out, like Shopify kind of entering like that trade opportunity right now, right? Breaking through like the 50 day, and now you have like a really clean area to focus on at the 100 day, right? So like it's kind of like almost like these are almost like Me Too trades where you're almost like one goes and you're watching for the other one to go, but like these are the types of setups that I feel like have been working really great, just because you have like a strong trend in place. So one after the other, if they're breaking through key resistance, then you kind of see like a little bit of like an oversold bounce or a little bit of like a catch up trade. So like Okta worked great. Now you're seeing like Shop starting to like clear like 50-day resistance. This could have like a path to the 100 day, right? So like these are some of like the things I'm focused on. These are like the setups I'm looking for. I like to call them fast developing, because it kind of triggers one day, and like you really want to be involved like on the day it triggers or the day after it triggers, because they can really move pretty fast once they start to go. And then like the sweet spot is like 2 weeks. I feel like the 2 week time frame in like a tape like this is really like what has been working great. Um, so, I mean, like a lot of like the trade ideas, like you'll see right now, like I have them like out through like December expiration, or a bunch of the trade ideas are like December 20th expiration. So like about 4 weeks, give or take. Um, but like most of the time, like I'm looking for like these trades to play out in like a 2 week time frame, like because that's really like the sweet spot, where I feel like still plenty of time value, but also like you're also not paying like too much premium out through like January or February or March or stuff like that. All right, so like I like the 2 week. If these trades play out like a 2 week time frame, that's kind of like the perfect sweet spot, for these types of setups. Okay, and again, another name like, and like you'll see like the pattern I have with all of these, like they're kind of like a breakthrough like key moving averages, right? So I'm really focused on like key moving averages that may have been resistance over the last month and a half, 2 months. So Anthem, right? So Anthem, it was kind of pushing up into like this really critical like 200-day, which it was support, right? So the 200-day was support until it broke underneath, and then over like the last like maybe like beginning of end of October, beginning of November, it was acting as resistance. So again, kind of like the same idea, like looking for like a break above key moving average resistance, right? And then I'm looking for like a pretty quick move higher. So fast developing. So like about like a 2 week time frame. Uh, um, Anthem benefited from a headline on Friday But regardless of whether or not that the headline crossed, I mean, like the trade, the rationale or the reason for being in the trade was the same as the others. It was like a cross through key moving average resistance that had been in play like the last month, month and a half, 2 months, and then I'm looking for a relatively quick move, so like over like a 2 week time frame, higher. Okay, so I really would want to either scale back risk within 2 weeks or be out of the trade within 2 weeks. That's what I mean by a 2 week time frame. Like I want that trade to play out in 2 weeks. So either like scale back risk and roll, or like have the trade completely play out and be out of it totally in 2 weeks. All right. So you'll notice that like a lot of like the trade ideas that I've been setting up, a lot of like the swing ideas, one shape or form kind of revolve around like this type of pattern. And like Halliburton, like we talked about before, right? So Halliburton, right? Hit the 100A, failed. Hit the 100A, failed. Broke through the 100A and then was consolidating above the 100A. So like when I got so when the trade was written up, it's basically looking for continuation into like this like open like pocket zone, right? Obviously, it hasn't gone yet, which I don't love, but at the same time, like the reason for like the trade still stands, and that's kind of what I'm looking for. It's like when the things break through like the moving average, the lower moving average resistance from like the last month, month and a half. I'm looking for like kind of like strong, quick continuation higher. Okay. And what were some of the other? I can't think of the other swing ideas. Like escaped me right now. But yeah, that's really like that's what I find is working great. And if it's not broke, like don't fix it, right? I mean, like this is what's working in this tape. That's the time frame that's working. So keep hitting it, right? Keep going after it. When the SPY or when the Qs finally pull back, when they start to break down, then we'll back off that idea. And then we'll maybe like focus on like some bearish setups. Maybe we'll focus on some volatility setups, right? Maybe some reversal setups, whatever. But for right now, we're in a very strong trend, and these are the types of setups that I find consistently work time and time and time again in this type of like trend and tape. So like that's really what I'm focused on. A lot of my trade ideas are going to revolve around this, and I wanted to highlight it because I'm sure that there's plenty of names that you look at that probably have a similar setup. And maybe I haven't written up on for like an options and trip play idea, but maybe you could like look at it for your own trade idea just because it's a kind of like a similar setup. But these are really what I'm focused on, like these types of patterns, because I feel like they're really playing out cleanly, getting some great quick follow through, and kind of in and out, just rinse and repeat. All right. So I mean, do we want to go over maybe like one or two earnings setups for like this week or next? If not, we could kind of wrap it up there. We spent a lot of time going over like at the beginning, a lot of time going over like kind of like the state of the market. But I mean, if you wanted to like break down like a couple like earnings trades coming up this week, or um, or if not, we could wrap it up because I mean it's already been about like an hour, 15 minutes or so. What are you feeling? Okay, great. Okay, well, awesome. Yeah, I mean, thanks for hanging out tonight. Yeah, thanks for participating. Thanks for the questions, the comments. Um, if you guys have any questions, just please reach out. I love to hear from you, and like if I can, I'll answer to the best of my knowledge, best of my ability. And honestly, like these sessions are they're just like I want them to be as useful as possible. So, like even if you have questions like unrelated to anything we talked about, that's perfectly all right. So, um, if you don't feel comfortable asking it tonight, or maybe you just like it kind of like escaped you, um, definitely reach out, and I'll try to answer it. Um, just send an email. I'll follow up. All right. Um, and also, if you guys have any, like, if you want me to do any of those, like, so during the week I do those, do like the daily options and play videos. If there's anything you want me to talk about during the week, um, definitely just like shoot me an email or shoot me a message, and like I'll put together like a video during the week on it. So that'd be awesome. Like I'm always looking for like ideas for like the videos, and like if you guys reach out and like pass along a question, just kind of gives me like a kind of direction to go with it. So yeah, definitely follow up. All right, awesome. All right, well have a fantastic night. Hopefully we get some good action this week. I mean, Burlington tomorrow morning. Burlington doesn't report, but got Burlington options, so definitely gonna have my eye on that. So yeah, I'm hoping for some good action, good consistent action. That's all we can hope for, and yeah, looking forward to some hopefully some volatility coming back in the near future, right? So yeah, have a great night. Best of luck trading this week, and I'll talk to you guys all soon. All right? Yeah, and Deb, again, congratulations. Unbelievable news. Go out and should go out and plan like a trip somewhere exotic or somewhere wonderful. Congratulations again. That's just amazing. Some easily the best news I've heard in a while. So really, really happy for you. No, maybe we can. Yeah. Well, maybe we can go to. You can go to like a. You can go to like an exotic restaurant in Houston. All right. Beautiful. That's great. Well, yeah, definitely awesome news, and I'm really happy for you. And yeah, have a wonderful week. I'll talk to you guys all soon. Okay? Yeah. Take care. Have a good night.